Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here on Tuesday, May 31st with a Forex market and cryptocurrency analysis for you for the week of May 31st through June the 3rd. So we're going to give you a little weekly roundup on what we plan to see this week ahead of us. Just to show you that this is for educational purposes, we have our disclaimer up here to remind you that this is in a lag and only for informational purposes only. Alright, now if you haven't done so already, please subscribe to our YouTube channel or our Twitch channel, or even on Discord. We now have answered what many of you viewers have asked for. We have set up Discord again. We were on it a long time ago and then we got off it, and now we are back. So trying to integrate our streams with that. So, and also check out the book High Probable Japanese Candlestick Patterns, written by yours truly, available on Amazon.com in paperback and Kindle versions. All right, so we have the Forex-trading-unlock.com website pulled up, and here I gotta put on my protective glasses for the for the screens here. Okay, so Forex-trading-unlock.com, we have the workstation page already pulled up, and we're going to toggle down right here. We're going to skip past the numbers. If you go to our workstation page, you can see what daily numbers and for the whole week actually are ahead of you for different currencies. So dollar index ended last week in a little bit of a slump. You can see that it's still maintaining its corrective break to the downside. And the question is it over, or is it still in the main process of it? Well, as you can see, we touched down on the 50% line on Friday, and we have a little bit more of room to go should we want to press this correction some more. I think the key level you have to watch out for is this last swing low here around 99.84. But somewhere in here between Friday and the next few sessions, we should find a nice little bottom area and at least see an upside move to kind of balance out things and at least go into a neutral trade. Remember, overall, the dollar index is in a bull market, and we're going to see how things are being impacted today when it comes to the other currencies. All right, so euro, US dollar. All right, so take a look at this chart for a little bit, folks. As you can see, this market has been trending lower for a while, and one of the key things that you want to be mindful of is the fact is that there are a lot of geopolitical issues that are really weighing on the euro right now. We all are aware of the Russian-Ukrainian conflict, which does not seem to have any resolve coming anytime soon. And I think that you really need to pay attention to the longer term impact on the trend for this trade. Factories are shutting down in Germany and throughout the EU. You got to remember that Russia is a big trading partner with these countries, and with the continuance of the embargoes and other restraints that they have on Russia, you're going to see a trickle down ripple effect that's going to really help to suppress the euro in the longer run over the course of the year. Now, we have an interest rate factor between the Fed and the ECB, where right now US is dominant on that fact. I would say that we have a really good chance at probably staying strong against the euro for at least the next 6 to 12 months. The biggest thing that really is weighing on them is the Ukrainian-Russian conflict. I think that if they can come to the table and find some sort of at least ceasefire in the short run, that you would find most likely the ability to see this market maybe get a bounce. Oil is also weighing on this market. We're going to take a look at that and show you how the impact of the 30-year Treasury bonds, as they are sliding lower and as oil is going higher, this is helping to suppress the euro. And this is definitely a fundamental fact that's going to be part of the biggest weight as far as the trend is concerned. So unless the ECB starts to completely dissolve their quantitative easing policies and aggressively go after raising rates, there is probably little to no chance of seeing anything except for upside corrections like this, which this is viewed this is not the beginning of a bottom. I mean, yeah, anything could happen. Could it be the very bottom for the next 5 years? Absolutely. However, we are treading on some very, very thin ground here when it comes to the euro US dollar. So what I would be mindful of is the long term. We're going to take a look at that. And once we get through the euro, we're going to be able to show you how that's impact on the dollar index is the biggest weight, and that's really why the index is looking that way. But we have divergence going on in some of the other currencies, which are going to help excuse me, to give us a really good chance at catching some really nice trends that are going to remain intact for a while. The nice thing about currencies is that they do trend more than other markets do, and especially under the current circumstances, we are really looking at a good chance of seeing these trends where you can ride these out for a long time. I mean, if you catch a nice dip or rally, depending on the currency cross, that you can leg into for a, say, 3 to 4 to 6 month trade, that's something that you could really help to grow your equity in your account balances over time. And that's also how you can take your trading to the next level. All right, so Euro US dollar, here's what we have. We're going to double check real quick. If you have any questions or comments, please leave them on the chat room on Twitch and also on YouTube. We have some people out there on both. Thank you for the couple likes already on YouTube. All right, that's fantastic. On Discord, I don't know if who we got out there or not. I'm still trying to figure out how to integrate this properly, but I think we have it going. So, yes, we do. Okay. All right, there we go. All right, so back to the Euro US dollar. So we have this upper 107.52 to 108.62 area that is our upside correction level for the Euro US dollar as far as a target from this last major swing high to this last swing low. Now right here you see this little arrow here. We had this buy signal. This is a 3 inside up buy signal that occurred back in the middle of May. We have already hit our target as of Friday for the lower part of the range. This downward sloping resistance line that's keeping the trend intact is really helping to buffer the Euro US dollar. Now for compliance sake, I want to just let you know that we are short the Euro US dollar. All right, so on a monthly basis, you can see for May we've had a nice little bounce in the Euro US dollar. But as you can see, we really spiked down to a really low spot. We haven't been over the past 2 months in this area since back in 2017. That's a big deal, considering all the volatility over the past few years. We haven't been able to fall below to these lows since 2017, even in the midst of the global pandemic when everything first hit. But as you can see on a multi-month basis, that the trend is definitely going down. So on a really mega long-term basis, we came off a high, made a low, lower move high. Now we're making lower move lows. The long-term trend intact is a bear. Okay, so now on the weekly, you can see that we've had a little bit of a turn. 2 weeks ago, we had a buy signal. We had follow through last week. I think that what you're seeing today and into the next couple of sessions, this is it. So we have this long-term trend that we have been maintaining. We've had a very big bounce considering that we've been gradually sliding lower, and then over the past couple of months going into, past few weeks of April going into May, we had a little bit more of a harsh slide as far as momentum, and now we bounced back over the past couple of weeks. So I think how markets go in is how they go out. That's the reactionary. It's a knee-jerk reaction, but this is also just a corrective move. The overall trend is lower. With that being said, I think we're in a very low-risk sell area. Now, could we make new highs on a daily basis? Absolutely, anything is possible. However, let's take a look at a couple things real quick. We know that when it comes to the energy basis, according to the CME website, crude oil is up $2.63 already. It's over $17 a barrel. If we go back up to the markets tab and we pull up the interest rates, remember, futures are always in a delay by law. You cannot have them broadcasted in live real time. As you can see, the Treasury bonds are down 1 full basis point plus another 23 ticks. So that's already only, oops, who knows, we didn't forget to shut that off. The 10-year note we have down 22 ticks. So this is a pretty balanced move as far as the spread between the 10-year and the 30-year, but that means that as these rates are going up, bond prices are going down. That's adding strength to the U.S. dollar, weakness to the other currencies versus the dollar, especially the euro U.S. dollar. So we just went through the oil and the interest rates, and you can see that that's weighing on the euro today because it tried to make higher move highs between Sunday night's open and Monday's trade, and now we're into Tuesday. Okay, so it made those little spike up. Okay, as you can see on what was the 20th, or excuse me, the 30th of May, which was yesterday, holiday markets in the U.S., and now we're sliding lower. We tried to make newer move highs, failed to do so. We did come off. We're making a higher move low on a daily basis, as you can see here. But now let's go down to the hourly. On the hourly basis, yeah, we hit this downward sloping resistance line very, 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 very tight and fell off it. So this is actually kind of, I mean, it does happen, but this is a really significant level in the sense that it really stopped on a dime and then the market fell off. And this is after the United States markets opened up, after the global markets had been open already for a day and a half. Very significant, showing that weakness is starting to really become prevalent once again. Now, obviously anything can happen, but as for transparency's sake, once again, we are short the euro US dollar. We got short today, and we are short against the high from yesterday. So, which is right here. Now, this is a key pivot level. If we take out the high from yesterday, that takes out this downward sloping resistance line, gives us a short-term bullish extension for momentum, but I still think you're going to be capped around this 108.66 level, somewhere around here, just because of the fact that unless oil comes back in a big way, and now you're trading back at 117, oil is likely to go to 130 over the next few weeks to next couple months, if not even higher. I have a long-term prediction of $200 before the end of the year, $150 before the end of the summer. We just got through Memorial Day weekend. We got 3 whole months just to get to 150, and we're not that far away. And especially now that we've taken out this high, the previous high in oil, that was a swing high that was holding a pivot base as far as keeping the market down. I think that we're going to build momentum and continue to travel higher. Reality is this administration wants you to pay a lot for gas. Just the way it is. Inflation ain't going away. Let's ride the trend, make some money. Your dollar is decreasing in value. You got to make as many dollars as possible. One way to possibly do that is by shorting the euro US dollar. So, not that you should take this trade either. So, but we have a signal. We have our money management in place. We're risking a few pips above the high. That's it. We have a downside target of a minimal of getting back towards this 105.74 area down to 104.89. This is the critical area of where we had our major swing lows on the monthly basis. If we fall below here, obviously the trend is intact after having made a lower swing high, looking to make lower move lows once again. We have a long-term projection of parity no matter what before the end of the summer. I think there's a good chance of hitting parity before the 4th of July. And should we fall off hard over the next few sessions into the beginning of June, well, then we may even see it within the next couple of weeks. Reason being is it's not that we have thin holiday summertime markets coming ahead of us, which we could. However, with the current geopolitical things that are going on and everything else, we haven't had a calm summer trading wise in a couple of years, and there's no reason to even remotely think that this summer is going to become a sleepy, lazy summertime trade. That being said, there's lots of opportunity for traders of different Forex pairs to really capitalize on, I believe, over the next few months as we get through the summer of 2022. So, all right, as far as upside, we told you our cap here is right around this area. One of the biggest levels you'd have to get above to even consider being neutral in the long term would be this upper 109.43 area. If we took out this last swing high, well, then that would not dictate a complete reversal of trend, but it would indicate a position of neutrality where the euro US dollar may be setting up a wide range trade. Remember, before COVID, the euro US dollar was in a range trade for quite some time. then all of a sudden, obviously, it popped out, and it was a very tight one at that. I don't expect that to occur, but it wouldn't be out of the realm of possibility if things could remotely subside in Europe and we get some relief as far as inflation across the globe. We'll see if that happens. Should that occur, maybe we start to see a range trade somewhere where we cap out between 107.5 and 108, 109 area, and then we bottom out around this area. So we could start to zigzag and go sideways. I personally don't think that's going to happen. I believe that we are setting up to make the newer swing low, which we are going to fall back then on support and look to make lower move lows. Once again, parity being the longer term target. All right, now that we've exhausted the euro US dollar, let's look at the British pound US dollar. This is another one that is starting to lose steam on its upside correction. I don't think the downside level projections are as severe when it comes to the pound US dollar versus the euro. The euro is one that has a lot more weakness due to the fact that they don't have any energy products. They're energy dependent. Russia being one of their biggest suppliers, and something that they are obviously in a conundrum about. So, but the UK doesn't have those issues. They have other issues, one of them being interest rates. The difference between the Bank of England and the U.S. Federal Reserve. We'll see what kind of tug of war they start to engage in over the summer. Right now, the U.S. Fed seems to be the one that's obviously has the reins and is taking advantage of everything that's going on. When it comes to momentum, though, that variable, which is, remember, interest rates are a function of currency pricing, that's one that may start to come into question over the next month and a half. So be mindful of that. If the Bank of England starts to really aggressively go after higher rates and starts to cut a lot of their bond buying, then I would assume that that would give less strength to the dollar versus the pound, not necessarily making the pound stronger, but making it not as weak as it is right now. And definitely Brexit, it could not have come at a better time for the UK, for them regaining their sovereignty, because think about, had they not had that separation in front of the pandemic and going into what's going on now in this world, they would be taking on more refugees, donating more money to the Ukraine, and exhausting their resources into the EU, which is very, very taxed right now. So I think that, in hindsight, excuse me, I was always pro-Brexit. There was many people that weren't. I am not English. I don't care. I have no family there. I have no vested interest in what does or doesn't happen in the UK, but I am all for nations' freedom and sovereignty. And the more you collectively come together, like in groups such as the EU and what have you, you lose that power, and then all of a sudden you lose freedom. So I think that gives strength to the pound that the euro does not have, because they have the power to control their currency, whereas the EU countries, they don't. All right, so upside potential, we still have I would say 128.56 up here caps things. Now remember, you have excuse me, this downward sloping resistance line as well. Unlike the euro, it hasn't reached that level. We're running excuse me, into more problems here at this 126.20 or excuse me, 126.37 area. We'll see how it bobbles here. We are short for compliance, just to let you know, against these highs. We got short today. We have a stop in just above the recent swing high from 2 sessions ago. We're not expecting any major slide here, but we are looking for a correction back down to 124 even-ish. I think that bouncing off of this downward sloping resistance line isn't going to happen. I believe we're going to fall back on support before that. And now, I am not bearish on the pound US dollar like the euro. Like long term, once again, we're looking for parity with the dollar and the euro. Excuse me, with the British pound US dollar, not so. In this case, we are looking more for a test back below 124 even, down to 123. I would expect, if you are going to see some neutral range trading conditions develop, the pound US dollar over the next month and a half, I think, is going to start to fish along in a sideways pattern, giving range traders a lot of fun and a lot of ability to capitalize. I think your swing trade ability to capitalize in the pound US dollar is going to diminish just for a couple of months, though. I'm not negative on activity in the pound. I just think that you have to see how these central banks react. All right, let's double check here. Do we have any questions on YouTube? No questions on Twitch. That's all right. We'll pull up on Discord. Nothing. Okay, that's all good. So, and while you're at it, all those of you that are watching, if you wouldn't mind, make sure that if you haven't subscribed, you do subscribe to our channel, and also tweet it out and give a little like so the general public out there, your trading friends, can know about our live webinar going on, or they can also subscribe to our channels and look at our past videos and playlists, especially on YouTube, which we have a lot there to offer for you as far as content. And also, let's see, checking here. All right. Oh, okay. So nice little comment there. All right. Thank you. All right. So pound US dollar right now, we're looking for this market to correct back down here minimally. I would say probably down to here. Take the 50%. Now this buy signal here that we had back in the middle of May, we already hit our upside target. So that doesn't mean that the trend isn't going to continue and the bulls are here for the rest of the summer. But right, like I said, right now between the fundamentals, the technicals, and the geopoliticals, we're bearish on this. And I think we could easily come back to $24.18 area here. This is where I'm looking to take profit. I don't know if this has the ability to really head down to make new lows on a weekly and monthly basis anytime soon. Now, here's a volatile European currency. US dollar Swiss, for transparency's sake, we got long today against the low from 2 sessions ago. I do believe that this market here, we've already come into our downside corrective target area. Markets tend to go out like they come in. You can see that we radically ran up, we radically pulled back, and now we've started to slow and consolidate. This is a consolidation pattern where I think that you're going to find support. Is it possible that we fail? Of course it is. But right now, all the factors are going towards this trend. Now, ironically, if you take the low from a couple sessions ago from this last swing low here, so here's your last swing, major swing low, swing high right up here, which is our big area to violate and shoot for. Okay. Then we came back here. The question is are we establishing a new swing low? Well, obviously we're making lows versus this high. The question is the trend going to continue lower, or are we going to get a bounce at least somewhat to the upside? All right, overall, we're looking for a parity and above. I think that there's a really good chance that US dollar Swiss, not only is it a low risk buy against this low right here, if this low stays right here, we have a really good chance at this being the low in this market for the rest of the summer. This is a key buy level for this market. One reason that we are very bearish the Swiss, meaning bullish the US dollar Swiss, is they're no longer a neutral country. That was the biggest value of the Swiss country itself and their banking system and their currency. So now there is less of a desire to hold Swiss currency because it is no longer going to be a flight to quality currency as far as many views around the world and growing. It also means that their banks they already are starting to lose a high level degree of customers. And now we're not talking about little retail people either. We're talking about major institutions, governments, and very, 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 very high net worth individuals and families. So this doesn't bode well for Switzerland as far as economics are concerned, because that is their driving engine, is banking. So I would be mindful of this. Parity, we shot through that nicely a couple weeks back. We obviously came back, but remember, markets go out like they come in. We've balanced out that overzealous upside momentum. And you got to realize when the Swiss broke out here, this was all when they made that announcement about locking up Russian assets and blah, 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 and no longer having any financial transactions conducting with Russians and certain people involved in the embargoes and financial restraints across Europe. And once again, that ruins the credibility of the Swiss. You're no longer neutral. Now anyone's money can be basically taken if you have your money in a Swiss bank. So that really isn't a good thing. So something to be mindful of. And right now, giving a high level of bullish support to this. If you'll notice, this current line from this swing low to this potential new swing low is around a 45-degree angle. That is a very good slope for a trend. So now if this is any indication of what's going on, you could basically figure out that the new range will be coming up, you know, oops, that's not what we want. We want this. So let's go like to here. Oh, see this little channeling here? See how that works? This would give us a really nice channel to develop and stay in over the next probably 3 to 6 months, maybe even a year. I would be shocked if, unless there's a big devaluation of the U.S. dollar, which right now the dollar, we looked at the dollar index to start this video, is not in a free fall. It's in a correction to the downside. And as this market turns, remember it's weighing more. The euro is the biggest weight in the dollar index. So where that's going is where the dollar index tends to go as well. But as that bottoms, and especially as the euros, if that does start to fall off the map, that's going to weaken the U.S. dollar, weaken the Swiss, meaning giving strength to the U.S. dollar Swiss and give us a nice chance to rally to higher levels. Now, once again, I don't see us going to parity like in a couple of sessions, but I do believe that going back to parity is very likely and probably going to happen over the course of the next few weeks. I wouldn't doubt that we get there before we get to the July 4th holiday in the U.S. So here's our timeline right here, and we're looking to see this snake along, oops, and somehow get up this way. So probably, maybe just, even if it's just below parity, that's not the end of the world. I don't mind that, but I still see that this channel here, this is the new corridor for the trend. And this is a nice little area where you can kind of figure out that if we bounce off this, we come up to parity sooner than later, come back, you can find some nice swing trades as we gradually, trend higher. Boy, these lights are super bright. That's why I had to put these glasses on. We got to work on the filter on that one. All right, U.S. dollar, Japanese yen. This is one for compliance sake that we are long. We've been long this one for months. I would be very mindful of what is going on here with, why do I have this here? We can get this out of here. All right, so, there we go. All right. I don't know why that's doing that. Let's put all right, so the low that we had set about a week ago is going to be a key low here, pivot point for this correction. Now, we have a nice breakout to the upside on a daily level today. We had been just meandering our way lower, and I think this was because you had a rally in the bond market that has been capped as of yesterday, and now is as of Friday, and is now trending lower, as we can see on today. Remember, we looked at the rates; it was down about a buck something. It's trading somewhere down here. In fact, let's take a look at right now 139.06. So if they're at 139.06, so this is where they were on Friday. Now we're at 139.06, which means that we took out this last higher swing low. So this trend here, and this is a big deal for the turn in the dollar, okay? So for those of you that are new to watching my videos and stuff, oops, wait, we got the wrong one here. Where is our... No. Okay. All right. So we had came off this high here. Now we were been trending. We made this lower move high here, higher move low, higher move high. Now all of a sudden we're coming down here after this higher move low, and this one here is in jeopardy. This pullback could just be a short-term correction. This is one of the reasons why we're having strength in the dollar, because interest rates are going lower in price oil is screaming through resistance today. That is giving the dollar strength, and especially for a currency cross like the U.S. dollar yen. Remember, the Japanese don't have oil, so the price of oil is very, very, very much a factor in the valuation of the yen, and also considering that their central bank, well, they ain't raising rates, that's for sure, because a few weeks ago they said that they're going to use unlimited buying power to keep the market rate at 0.25%. That's not just their bank rate, they're actually keeping the physical market rate at 0.25%. So there will not be enough selling to overtake the buying pressure of the Japanese finance ministry and also the Bank of Japan. Now, as far as that word unlimited buying, when they said that, I know what it means semantically, but I don't understand how they have the resources for unlimited buying. Eventually that's going to run out of gas and it's going to hurt them. So, but they don't have inflation in Japan like they have around most of the world, except in commodity prices. Food prices they have next to none, but that's because they're self-sustaining. So, and they don't really import much as far as food from the rest of the world. So, but as far as U.S. dollar yen, this breakout to the upside isn't looking like just a profit-taking move after trending lower for the past few weeks. I believe that this is now where you are going to see a nice breakout to the upside that's going to continue. So here's our high. As you can see, we have been trending lower, and as of yesterday's trade into today, this market has broken out to the upside, and now we are looking for higher move highs to be maintained going forward, not just through the next couple of sessions, but especially if we get above 129.58, I think we're going to make a run for a 132 to 133. Reason being is the Japanese had put a line in the sand back when the market was trading back here around 118. Okay, and they started to make references to the fact that they would defend their currency. Then, on this day, March 28th, 2022, when this market spiked up high like this, and then we had this first correction in weeks, that was when the Japanese government, the finance ministry, and the Bank of Japan came out and said that we are going to defend our currency at 130 no matter what. No matter what, they were going to make sure that that would be the ceiling on their currency versus the dollar and not go any higher. They were going to defend their currency, do whatever they had to do, and then we had this nice little correction. Only lasted for 3 days. We're still trading well below 130. The bulls come back, and boy, look at how we explode up to here. Well, we came just all the way up to just shy of 130. This is when we had another interest. This is where they came out again. Now, this is where, remember I said, the first time they said the finance ministry and the Bank of Japan were on the same page. We're going to defend our currency at 130. It falls just shy of 130 here. The finance ministry of Japan says, yes, we are going to do everything in our power to keep this currency from collapsing. Complete 180. They come out and say that besides not raising rates, which we knew that was going to be something like, how are you going to defend your currency unless you raise rates? They are using unlimited purchasing power to maintain an artificial floor in their bond market so that the pricing stays high. That's a big divergence in financial administration between the finance ministry and the Bank of Japan. All of a sudden, they were on one even keel, and then all of a sudden they split, going into trying to figure out how to protect your currency. Since then, we had pierced 130, we bobbled around here, and then we started to grind lower. I think a lot of that has to do is if you look at the 30-year, they have been grinding higher. Obviously today, this is the sell-off. This is key. If there's follow through to the downside with interest rates over the next couple of sessions, meaning they're going lower, rates are going higher, then that would presumably help to fuel momentum so that we will still see upside momentum to carry us up above this 129.58 area. Maybe we stall below 130 or around 130, but if those rates continue to go, if the bond prices continue to go down and oil prices continue to go up, I think there's enough momentum to catapult this market back up to above 131, and then maybe even up to 132 over the next few sessions into next week. And especially until the Bank of Japan changes their stance and literally, or actually doesn't change their stance, they actually do something. They actually have to pull the trigger, raise rates, cut their buying, and a bunch of other things, which I do not see them doing. I thought that they were going to when they had that correction. I thought, whoa, this is news to me that they came out together and made such an announcement. And now, obviously, usually you can set your watch by what the Japanese say and do, and the fact that they have this conflict, if you will, boy, I don't get it. That just doesn't add up. From my own personal experience over decades of dealing with the Japanese on a financial level in the futures and also the currency business. So, but we'll see. I don't know. As far as downside, I would key off of the low from a week ago. Any trading below this one, basically 26.17 area, that would have us coming back down to test this 126 or 125.08 area. If we fell below here, then I would say, well, we're grinding out a downside correction. Overall, this market is bullish, and I think that we've seen that it just doesn't have the ability to hammer this currency. The trend is so strong in the U.S. dollar yen that odds are very likely that we're going to go up and once again see what above 131, 132, then before we fall below 126. Anything can happen. Key off of oil. If oil trends higher tomorrow, if the Treasury market trends lower tomorrow, odds are very good that we continue this trend to the upside for U.S. dollar yen. Remember, there's oil numbers tomorrow. You can see me on tfnn.com at 8:40 Central Standard Time, 9:40 Eastern Time. I'm there almost every Wednesday, and we'll be talking about the Forex markets, the oil markets, the interest rate markets, and in real time as they are going on. So please check us out there at tfnn.com on their YouTube channel, or if you are subscribed to my YouTube channel, you can go on there. We have a playlist and a link that goes to their channel and also shows you videos that we've done for them in the past, including the most recent ones. So, upside, you know our targets. Downside, like I said, I think support is just too strong. We shouldn't get below those areas. All right, so, Australian dollar, U.S. dollar. Here we have, we made a higher move high today. We are short this market in front of its high. We have a conflicting thing. Oil is helping this trade, interest rates aren't. However, the political environment over in Australia and their financial environment as far as their economy is collapsing. So that is a good thing for the bears, for Australian dollar, US dollar, not for Australians. However, I do not see we've definitely gotten a clear indication of the political tone as to who is running that, not just that country, but that continent. And as long as communism prevails and freedoms are being stripped, you can expect their economy is not going to pull itself out of the hole that it's in. Increasing production is becoming an issue as far as they're basically a commodity supplier to China for the most part. And that relationship is tenuous at best, and they're suffering because of that as well. As far as it's not that there's not demand, but because there's lockdowns, they can't get anything to and from. So even if you could mine it, you can't ship it. And then also you have the issues of people working in Australia. So I think that you can view this as a corrective rally. We would have to get above the 72.68 to confirm any neutral to bullish posture in the longer term sense. I think we're running out of gas, especially as you see the Treasury bond market tank. Oil is the one thing that's going to keep this market from totally collapsing because it's going up. If you were to see a reversal in oil, then that may help the yen out, but it would definitely hurt the Australian dollar, US dollar. So we'll see how that goes. But I believe that the interest rate issue is enough to begin with to help to bring the Australian dollar, US dollar back down towards the 70.96 level. If we can fail from here, then 69.94 is where I'm looking for. Obviously, we took out this downward sloping resistance line a week and a half ago that was holding this channel in place. However, I think that this is an upside correction. The slope of this current rally is very severe. The buy signal we had here, we've already hit our upside targets and our extended target. So now we're kind of running out of gas. And I think that even if this market was to become and is bullish in the longer term sense, that we would see a little bit of at least a downside correction if that's the case, find support and find a balance there before trending higher. So not very bullish for Australian dollar, US dollar. New Zealand dollar, US dollar has a similar outlook. This one, actually, we're a little bit more bearish, and especially with the way it's shaping up today. If we close like this today, I wouldn't even doubt that we would see this market trend lower significantly over the next few sessions. The one thing about the New Zealand dollar, unlike the other ones, is that this one has less potential to maintain bullishness against the dollar. The same reasons that we are bearish Australian dollar is the same reasons that we're bearish the New Zealand dollar. Once again, I think that their political issues and stuff like that are so detrimental to how they can or cannot come out of what was COVID-19 and the pandemic. And because they're so restrictive versus many countries out there, I do not see that we could possibly have any type of ability to get any really true bullishness going on in this market. In fact, right now, we just sold one actually in real time. So yes, we're getting short right now. We're going to take today's high, and this is our risk level right here. So our high was, let's see, 65.63. So we're going to put our stop at 65.66. So 65.66. All right, so just above the high. We always put a few pips at least above, just so that way you don't have a double top or something and get stopped out unnecessarily. And plus because of the bid offer spread. So, all right, so we just got short the New Zealand dollar, putting our money where our mouth is. Let's see, on the hourly basis, it's already been trending lower. It's looking negative. Right now, it's in a bit of a bounce. But then, yeah, a half hour, it's looking like it's running out of gas. We'll see how it goes. Low risk short right there. Bullishness, if we were to take out the highs from today, and we've already hit, we fell short of this swing high right here. The market was trending lower. Here's a swing high, made a swing low. We're just shy of this swing high. So this is where our stop is. So if we're wrong and this market does get above it, well, now we're making a higher move high after a lower move low, which would have this market in neutral. We don't see that having this ability, especially with what's happening today. If we were to settle where we're at right now, I would expect follow through to the downside at least a little bit tomorrow. And if that's the case, this may be your last really good sell for the next couple of weeks. Very likely to see this market get hammered. All right, US dollar Canada, for compliance sake, just to remind you, we happen to buy into this dip. Not that we are bullish. We think this market is set up for sideways like this. If you look at our video from a few sessions back, we had drawn this line in here. We've gotten this follow through. This is holding us into our downside target zone, which we've just fell through today. And we're sustaining trading below this low here of 126.57 with our pivot point. I think that this is where we're starting to gyrate around this pivot, and then we're going to go sideways. We're not looking for a big upside rally, but we are looking for a move back up towards 128.37. I would say that if we fail from 126.11 and we actually continue to make new lows, this would be significant because this is the range between 128.13 and 126.11 is basically where the US dollar Canada has been trading for months. So if we're neutral to bullish on this market, we should find support and catch a little bit of a rally, but not expecting a lot of follow through. As far as the sell-off, obviously we're trending lower. We've been trending lower for the past few weeks with only 3 upside days. Today it definitely doesn't seem like it's shaping up to be one, but I think that I'm buying into a good support area where we're going to see, especially if dollar strength is really prevailing versus all these other markets, and if the bonds have follow through to the downside, that short term, the US dollar Canada, the bulls can catch a nice little trade to the upside. All right, now let's go to BTC USD. Before I move on to the current cryptocurrencies, let me see if we have anybody on Twitch that's got a question or comment. No. YouTube questions or comments. No. We got some viewers, but no comments. All right, so Bitcoin US dollar had a breakout to the upside yesterday. Woohoo! Yeah, it's been trading pretty sloppy and put in a real big range trade for the last week and a half, 2 weeks, and now we're starting to look bullish, or are we? I think we have obviously a nice breakout to the upside. We're coming off a swing low, lower move high, higher move low, higher move high. So we're neutral at best. I wouldn't say that we're bullish. I think that we found a nice base, and now it's time to snake along. The question is this breakout because people are bullish Bitcoin? No, I think the real reason is for ETH US dollar. Ethereum US dollar, this one broke out to the upside also yesterday, but look at how it's trading today. So I think that you have these Bitcoin bulls that are like, hey, yeah, we're going to do this and blah, blah, blah. Yeah, here we had made a lower move low. We barely made a higher move low. We almost, like, here's the low that let's get rid of this little area here. So the low here was $1,701. Here it's $1,702.53. We came $1.53 away from making new lows. I find this is good support here. However, I would be leery since this market seems to be a little bit lower than Bitcoin is going today. It's going the opposite way. Then this is the dog that wags the tail. I think you're having a little extra follow through in Bitcoin because it's watched more. But Ethereum is the one to watch. If we can't sustain this trade where it's at and trend a little bit higher, I would expect us to snake along and then come back near the lows. This in turn should also drag Bitcoin down as well. Let's look at the Doge US dollar because I got a buddy of mine who he watches these videos and I do it to tease. Yeah, look at that big breakout to the upside yesterday there, buddy. And look at where it is today. More sideways, going lower. Crypto space is still it's falling under the pain from the news from the Luna and everything else that happened over the past couple of weeks. So, and also things are weighing on the rest of the people that you got to remember there was a big infusion in the cryptocurrencies because of a lot of free money during COVID. People are running out of their free money, so they don't have money to throw away, and now they're taking money out of the cryptocurrency space as well. XMR US dollar, we had a nice rally that we were watching last week. We did hit our nice little sell signal here, and we had our nice correction, and now boom, we came right back up to make a higher move high, a little bit lower on the day. This one is trending higher. It came from a low, higher move low, lower move high, higher move low, lower move high. Yesterday, higher move high. This one we were bullish, but remember this was in front of the other current cryptocurrencies. We are bullish, but remember we expect this one to be in a certain range. We're in a good buying area now. It could still run up, I would say, to the 260, 280 area. Once you get up here, you're running out of steam. Not that we couldn't go up to 350, 400, but my area is that you buy it between 180 and 220, and you sell it out between 280 and 320, because that range there you have a really good chance at profiting off of and averaging in and out of your position in Monero US dollar. If you watch other videos, you can see why we tout Monero as one of the solid cryptocurrencies. It's just the fact that its technology is not usable, but it's in use, and the value for it and the pricing for it is competitive. It makes business sense, unlike a lot of cryptocurrencies that just don't, because if you're making something faster and better, it has to come at a reduced cost. If it doesn't come at a reduced cost, it's bad technology. It's just simple. And it's also, that's not technology. Technology is, in order to really be valid technology, you have to have that diminishing cost variable. as far as the pricing goes. All right, so we looked at all those. Let's go back to the Euro US dollar where we started our journey today. Still a little bit lower on the day, and we'll see how things shape up. One thing I want you to be mindful of, once again, is the interest rate trade. Remember what was going on in the bonds does in the 10-year does impact the Forex markets, especially the dollar versus some of the major crosses. And especially the ones where their central banks are either not on, they're either in the opposite page or they're just neutral, because our U.S. Fed right now is very, very aggressive in what they are doing. Let's double check to make sure we don't have any questions out there. Got a little action on YouTube. Thank you again for the likes there. Hopefully you guys shared us out too. And on Twitch, we got some viewers there. I know everyone's quiet. We had a lot of interaction last week on Thursday and Friday with our viewers. So today, everyone's coming back from the holiday. Everyone's tired, trying to make sense of it all. So it doesn't seem like you guys are too busy today. So, which is totally fine with us, because we're getting ready to get through the rest of our day after we sign off. But before we do that, we want you to remind you to go to forex-trading-unlock.com. And remember, you just go to the market analysis, go to workstation, that will pull up that page that we were working this analysis from. And remember, you don't have to log in, it's all in real time. Product courses and services, you go down to high probable Japanese candlestick patterns. And like every page on here, you hover over this little thing and it pulls up Facebook, Amazon, Twitter. We really appreciate it if you hit the Twitter and other ones and share it like I just did there on Twitter. And then you come down here, since we're on this page, there's a nice little video that gives you a little bit of an introduction to what the book is about that I've written here. And obviously every page we have a live streaming thing. There I am. Hi. So high probable Japanese candlestick patterns. We have a nice little cover of the book where you can buy, share, and preview. We prefer that you buy it, but also if you share it, we would really be very grateful of that. And if you preview it also, that'll give you a reason to check it out. Remember, it's available on paperback and Kindle version. If you are a Kindle, not Kindle Amazon Prime, but a Kindle whatever reader, you don't have to purchase our book if you're part of their book reading monthly subscription. So that way you can check it out there on Kindle, read it for free because it comes out of your monthly bill. And then if you really like it, we would hope that you pick up a physical copy for yourself and order that. So with that being said, I want to thank you very much for your time today and joining us at forex-trading-unlock.com. Make sure that when you're while you're here, still subscribe to our YouTube or our Twitch channel. Leave any comments, if you will, in the comment section for our videos, and we will get back to them since you haven't left any questions while we are live. And if we can't get, we will definitely get to you on the comment section, but we will also try and incorporate some of those questions into our future videos, if you will. So with that being said, I'm Teddy Keckstedt from Forex Trading Unlocked. Once again, check us out at forex-trading-unlocked.com.